Today is Saturday, February 22nd, 2025. And yesterday, which was Friday, I was actually down almost 10 grand, 6.38% on a day where the NASDAQ was actually down 2%. And if we take a look at the week, the NASDAQ is down 2.42% versus my week, which is down 14.7%. For the past month, I am up 2. And of course, the NASDAQ is down 1.12%. And year to date, even though I was up basically 38.8%, year to date, I am now only 18.88%. And the NASDAQ, of course, is only up 2.27%. And if we take a look at my 1 year chart, it looks like it broke out, but is now coming all the way back down where I was probably early February, January-ish. And of course, my all-time chart still looking parabolic, even though we had a very steep drop this week. Now, even though I am basically down $25,000 this week on paper, I would still say it's a fairly successful week, because this month I actually made almost $500 in covered call premium on Palantir. Now, the actual amount is more around $490, but still, I would call that a success. $490 is pretty good considering my margin interest payment for this month to Robinhood is a little over $260. And I say that because I'm also including Robinhood Gold. And not only did I make $490 in covered call premium from Palantir, I also sold a cash secured put on REPX, collecting almost $47. And I say almost because we all know that Robinhood takes a little bit more in fees, and the transaction history doesn't show the actual net amount. Even though I keep saying in every single video, it's not that big of a deal, Robinhood, please just show the net amount. But as of right now, I only have my REPX cash secured put and of course my two honest cash secured puts at a strike price of $5. And after doing a little bit of math in my spreadsheet, it turns out that with covered call premiums included, my actual average cost per share in Palantir is around $14. So I am slowly getting my average cost down and slowly withdrawing money out of Palantir without actually selling my 200 shares, because I did mention in a previous video or multiple videos probably that because I only have 200 shares of Palantir, I'm not really interested in cashing out completely in my position. I still think it's a great company with a good future for now. So definitely I want to keep some shares on the sidelines. But of course, I was well aware that back when it was trading around 130-ish, 125, it was starting to get pretty pricey. And you can make an argument, of course, that it's still overvalued at $100. But the reason why I started selling covered calls is because I wanted to slowly withdraw money out of my Palantir position without actually cashing in shares. And I would say I did a pretty decent job this week. Obviously, I could have done better. I think there were some covered calls trading at like $800 or whatever. I could have sold that closer to the actual price of the shares. But it is what it is. You can't really time these things too perfectly. And after my mistake of closing my win cash secured put a bit too early, I think it was last week on their earnings, I am feeling a little bit better about myself on my successful Palantir covered call trades. And on the topic of Palantir and what I think they should be doing right now at these like very overvalued prices, whatever, is also something that I've been saying about two other stocks. So if any of you guys have seen my previous videos, you would know that I think PayPal and Robinhood should actually start paying a dividend to reward those long-term investors, people that have been in the stock for a while, and to also help support their stock prices. Of course, PayPal is still trying to recover their share price. And I believe that PayPal is not only a mature enough company to afford that dividend, but it would also help support their stock price during a time of recovery. And of course, Robinhood, that stock has been on fire lately. They've been increasing their free cash flow net income drastically. And I think they actually can afford a dividend now. And of course, with the stock price being on fire, they're going to need something that kind of supports that stock price, especially for to somewhat disincentivize people from cashing in and selling their shares. Now, obviously, paying a dividend isn't going to help every single stock on the market. I'm just saying that for PayPal, Robinhood, and Palantir specifically, paying a dividend might actually help their stock price. So, and Palantir specifically, I've been seeing a lot of talk on X and YouTube, etc., of traders and investors saying that they're going to sell their Palantir shares, or they already have sold their shares. So I think it's even more important for Palantir specifically to start paying dividends and disincentivize people from actually cashing in their shares. Because right now, a lot of long-term investors seeing that stock price going down is just going to panic them even more and get them in a hurry to cash in their shares to actually see a return on their money. But if Palantir can continue to grow sales, grow their free cash flow per share, and maintain a stable business, then they should have no issues paying out that dividend and consistently growing that dividend over time, rewarding that long-term shareholder base to disincentivize them from actually going to the market and selling shares in order to see that return on their money. And to briefly talk about my Roth IRA, I was up a decent amount in small caps, I believe. I think it was around when Trump got elected, but unfortunately, it is back down. Well, I'm down 0.6% on it now. But I would say for the most part, everything else that I've been talking about has somewhat played out. Yen has been on fire. And if any of you guys see my older videos where I talk about a possible scenario where Chinese stocks actually do good on a day where American stocks do bad. And it seems like we did see that this past Friday. Yen, of course, being up over 4% on a day where the NASDAQ was down 2%. So we did start to see a bit of that. And of course, my leverage position on treasuries, 3.7% on Friday when the NASDAQ was down 2%. And of course, we can't forget about Pepsi finally acting like a flight to safety on a day that was heavy red. So Pepsi was up 2.4%. And two stocks that I might consider buying more of, I'll have to look a little bit deeper into Nubank, but I did see that their stock was down almost 19% on Friday. I think it was because of an earnings reaction. The market didn't like what they heard. And also, I believe a lot of Brazilian stocks were also down, so that probably dragged Nubank down along with it. And even though I'm going to have to dive a little bit deeper into Nubank as to why they're down so bad, I might consider buying more because I believe it's around my average cost. So average cost right now is around $11, but I think after covered call premiums, it's somewhere in the $10 range. So I'm basically break even on Nubank, and I might buy more. I'm not sure yet. And another stock that I might consider buying, maybe not in my Robinhood account, but in like a separate, smaller brokerage account that I don't really care about, is Black Rifle. So Black Rifle is a stock that not only has it not had a good year, but it hasn't done well at all since IPO. I think Robinhood's chart is a little bit messed up when it comes to Black Rifle, but I think they were a SPAC because they're trading around the $10 range right here. And of course, the SPAC IPO probably shot them up to like $20-some, almost $30 actually. And of course, it is now about $2.50 per share. But what made me even look into Black Rifle to begin with was seeing some sort of an event or some kind of advertisement relating to their brand new energy drinks. And I did get to try some. It's actually not that bad. But after seeing the actual store and how many people were there and in the parking lot, how packed it was, it actually made me look into the charts and, of course, looking it up on Seeking Alpha. And I noticed that their free cash flow per share is actually positive now. And if I'm not mistaken, it's about 13 cents, which is about a 5% free cash flow yield. I mean, I'm just doing rough math in my head right now, but I do think it's about a 5% free cash flow per share yield. And I don't know much about the company, but it might be a stock that I consider buying a small position in a separate account. And speaking of energy drinks, Celsius was actually up almost 30% Friday. So congratulations to any of you guys that actually bought Celsius at a profitable price, because I know most of y'all that have been buying Celsius since my last video. I think it was one of my earliest videos about how I think Celsius is actually not a stock to buy. I think anybody that had bought the stock since then has actually lost money. I don't remember exactly, but congratulations to any of you guys that have been buying Celsius in the $20 range and made a lot of money Friday. This move in Celsius could also be why we saw a drastic move in Pepsi on Friday. So Pepsi somewhat acting like a flight to safety, but also making a big move based on Celsius's stock price, because Pepsi does own a little bit of Celsius, and they also have a partnership. So even though I don't have Celsius stock in my Robinhood account, I am slightly benefiting off of it through Pepsi stock. So even though I did hate on Celsius in the past, I am happy that their stock is doing well, business is doing well, and hopefully Pepsi will also do very well with them so that they can keep paying me those juicy dividends.